Hey guys, TommyBryson here, and today I'm going to tell you exactly what I invest into step by step and what my plan is for 2021. And by the way, spoiler alert here, it's the same plan as 2019 and 2018. Nothing has changed, okay? And in 2020, I actually made around $40,000 net from my investments, okay? And today I'll show you exactly how I actually did that. But the point of investing long term is not to hop from strategy to strategy. It's more like, hey, what's my plan? Let me work that plan and make money long term. You don't change back and forth. I'm a trader, an index fund investor, a stock picker. No, you stick to one thing and you work that plan and you make money. That's how it works. And by the way, if you guys are new here, I post videos every single day, so you should also subscribe, hit the bell so you're notified, on top of also destroying the like button. Now, the first thing is this, guys. I would not feel good if I don't first tell you about this, okay? You never want to make short-term decisions when it comes to being an investor. For example, politics, trends, and also, most importantly here, volatility, okay? Now, when it comes to politics, they change every single year. You don't want to depend on someone or politicians and all this stuff to make an investment decisions. Usually, you want to ignore that stuff, okay? Just focus on what you're doing. And by the way, but Tommy, all this stuff in reality, tax laws can change. A lot can change. You can't control that stuff. So you can't just be like, hey, I'm going to sell because of this. No, the answer is don't sell. Don't focus on that. When it comes to trends, when it wasn't Tesla, it was crypto. When it wasn't crypto, it was basically tech stocks. When it wasn't tech stocks, it was bio stocks. When it was bio stocks, it was railroads. I've read all of those trends. In reality, all trends tend to fade away. Not saying Tesla's going to fade away, but saying, for example, you don't want to base your investment livelihood and strategy based on trends. That's never a good idea. And lastly, volatility is whenever a stock goes up and down, up and down. That's volatility. That does not equal risk. When you have people buying and selling, stocks will always go up and will always go down. That is not equal to risk. Risk is, for example, whenever you invest into a company and now that company has problems with management, also employees, customers, a bad product, competition, all those things are risks. A price going up and down does not equal risk. That's just volatility, and that's just part of the game. So keep that right there in mind, okay? Do not make short-term decisions on this stuff, okay? Just focus on the long-term perspective of what you're doing when it comes to investing. So none of this stuff right here is going to make me go ahead and say, hey, I have to sell my stocks, politics, trends, volatility. The answer is no. None of that stuff matters. Now, here's exactly how I went ahead and made 40K and exactly what I invest my money into. And there's only really three things you actually need to know. The first thing is called dollar cost average, meaning you're going to invest the same amount of money every single time you get paid. That way, you buy high, you buy low, and at the end, you get the average. That way, you're not worried about, hey, I'm buying too high or I'm buying too low. In reality, if you invest the same amount of money every single week, every single day of the week, whatever you choose to actually do it, or every single month, the answer is you're going to get the average price over the year, and that's basically what you want. Yeah, on top of that, what I do is index fund investing, meaning I'm not out there picking this stock and that stock and this stock, at least not right now, because basically that's risky. And in reality, it takes a lot of work to do it correctly. And if you don't take a lot of work to do it, usually you're speculating and gambling. And that's not what I want to do when it comes to investing. So what I do is index fund investing. That way, I'm diversified and I don't carry that much risk. And lastly, I highly, highly recommend you invest 20% if you don't have any kids, and 25% if you do have kids. The extra 5% is towards a 529 account to go ahead and build up the college fund for that kid to actually help him out or her out whenever it comes to paying for college. Something I wish my mom and my dad did, but in reality, they had no idea when it came to investing. So basically, I don't blame them at all, okay? And neither should you, your parents, okay? And by the way, obviously, if you're going to invest 20 to 25% of your money, you're going to need a solid budget. So I highly recommend you use my simple budget method, and I'll put a video down below. That way you can copy the way I budget my money also. But now, here's exactly what I invest my money into. And again, the app I use is called M1 Finance. I'll show you guys in a second. And on top of that, my portfolio is 80% stock ETFs and also 20% bonds, because basically I want to be able to sleep at night. And whenever bonds are down, stocks are up. Whenever stocks are up, bonds are down. That way I have a seesaw effect and I don't carry that much risk. Now, guys, this right here is my phone, as you guys can see. And right here on the screen right here is also my phone. Here, I go swipe, I swipe, swipe, swipe. It's my phone. It's a real thing, okay? Now, the app I use again is called M1 Finance to actually go ahead and invest. And so far, I've made this year, well, last year, 2020, around $10,795 overall. Tommy, you said you made 40K. Where is the rest of the money? You liar, clickbait, all this stuff. In reality, no, okay. I also use something called the SoFi app, okay, to actually go ahead and invest. Now I'm in the process of transferring all my investments over to M1 Finance, but before that, I was investing in several apps to test them out and so on, and then it got out of hand, and I had a lot of money in it, but now I'm transferring everything over to M1 Finance. So far, M1 Finance has 10K, and SoFi, as you guys can see right here, has around $28,855 in gains. But I also have Robinhood, the Cash App, and Acorns. Combined with all my gains, I have somewhere around 40K, a little bit above or a little bit below. And that's where that 40K profit actually came from. And again, okay, whenever the stock market was down last year, Tommy, how the heck did you make so much money when the entire market was down? The answer is, well, if you're a long-term investor, that's when you should be happy, because basically you're going to be holding on forever, for a long time, for like 20, 30, 40 years, right? So in reality, whenever the stock market is down, that is your chance to go ahead and buy at a massive discount. For example, if I was into real estate in 2008, would be the best time to go ahead and buy properties for quarters on the dollar. For example, during the Great Depression, that would have been the best time to actually go ahead and buy stocks basically for pennies on the dollar, because everything was so cheap. And that's why you have so many millionaires become millionaires. So basically, for us investors, whenever the stock market is down, that's good. Whenever it's up, we do dollar cost average. We buy high, buy low, buy high. At the end, got the average. But whenever it's down, that's when you should be at your happiest. So right here, guys, is my entire M1 Finance portfolio and exactly what I actually invest into. Now, again, I invest into 7 different ETFs. Some are in the US market, outside the US, into small companies, into corporate bonds, into treasury bonds, into small cap, and on top of that, especially into real estate and also emerging markets. That way, I'm diversified and I don't carry that much risk. So for example, if I had $1, how would I invest that dollar? Okay, step by step. The answer is, well, 38% of that money would go into the S&P 500 ETF, meaning into the 500 largest companies in the US. For example, Microsoft, Tesla now, Apple, also Berkshire Hathaway, large companies, meaning I'll get the average return of the US stock market by investing into the S&P. And right now, I'm up around 21%. Pretty cool, right? Also, I would grab 16% or $16 and invest that money into developed markets outside of the US, meaning large companies outside the US. For example, Toyota. And why, Tommy? Why do this? The answer is basically, okay, although the US is great, okay, best country in the world, if you ask me, I love the US, okay? In reality, not every single year we're going to outperform the international market. So that's why you always want to be invested also into the international market, but not too much. And that's why I only do around 16%. And by the way, this year, well, last year, I made 31% in the international market, while in the US, I only made around 21%. But some years, it might be different. Some years, I might be better in the US, some years, I might do better in the international market. And that's why it's like this. On top of that, when it comes to small cap companies are smaller companies, not that massive, not that big, meaning they grow massively, largely fast, okay? But in reality, they can also crash a lot faster. So that's why right now, I'm up around 50%, right? But in reality, it's only around 14% or $14 of my $1 investment. By the way, did I say $1 for investing or $100? It should be $100, okay? That's the whole point here. But overall, I would only put 14% in here because basically it is very risky and you also want to keep that in mind. And some years you might do great, but other years you might actually do bad. So that's why you want to be diversified and not going way too heavy when it comes to small cap ETFs, okay? Now, on top of that, I also invest 10% and 10% into corporate bonds and also treasury bonds. Why? Because bonds suck. When it comes to returns, they suck. When it comes to stability, they actually are great, meaning that if the stock market crashes today, my bonds are most likely going to stay the same. That way, I don't carry that much risk. Again, I want a seesaw, meaning when stocks go up, my bonds go down. When stocks go down, my bonds go up, right? And right now, as you guys can see here, my bonds are actually down because basically the stocks are up. And that's just the way I want to invest. I don't want to carry that much risk, and that's why I have bonds in my portfolio. But again, only around 20% of my portfolio. And then I also invest into REITs, real estate investment trusts. Tell me why? Because basically, stocks are great, bonds are great, but basically, you also need a tiny bit of diversification. And that's why I only put 8% into the real estate market in a way. That way, if stocks are down, don't matter. Real estate is still going to do fine. And that's why right now is 3.73% because basically it's mostly into commercial properties. And in reality, you guys know that commercial is not doing that great in 2021. Okay, that's why it's like that. Also, lastly here, my last ETF is into emerging markets, meaning, for example, markets that are just growing, meaning there's a lot of risk and also regulations I really don't trust. So that's why it's only around 4%, meaning I can make a lot of money here, but in reality, it's not guaranteed. It's very risky, basically, okay? That's why, although I'm up 32% here, I'm not gonna go ahead and invest more money. So every time I invest $100, it would go exactly like this. And by the way, I also have other portfolios if you don't want to do it this way. For example, if I click research at the bottom left, and then I click, for example, the 3 little pins right here, and I go to my pies, well, here are other portfolios. For example, aggressive. If you're very aggressive and very young, you can actually just go ahead and invest just into stock ETFs, no bonds. In reality, I would not be able to sleep at night with this portfolio. That's why I don't have this one, although I should for my age at 23. On top of that, okay, if you already won the game of investing and have over 5 million or 10 million, okay, the answer is you can easily just go into a conservative portfolio where you have 80% bonds and only 20% into stock ETFs. Because basically, guys, okay, say for example, if you have $10 million invested, okay, into bonds and stuff like that, and you get, for example, 3% a year, that's around $300,000 a year, okay? That's how crazy this actually is. In reality, once you win the game, you don't need to take that much risk, and that's the core idea. But overall, guys, that's exactly what I invest my money into, exactly step by step. I use M1 Finance, that's my portfolio, and if you want to copy it, I have a link and also a video down below on exactly how to copy it. And on top of that, a link that if you click it, takes you directly to it, and when you click invest, it invests automatically directly into my portfolio. That way, you have exactly what I have. Now, on top of that, guys, okay, that's not all. Here is the last thing I actually want to give you guys, okay? A full technique when it comes to what I do. Now, again, my goal is to automate investing. The reason I use M1 Finance is basically it's automated, it's rebalancing automatically, and that way I keep exactly what I want to keep. 38% here, 60% here, 10% here. That way everything is done automatically. But in reality, here is how I would do it. When you go to M1 Finance and you click transfers, you can actually click, for example, hey, set automatic transfers. That way, whenever you get paid, weekly, bi-weekly, or monthly, you have that money automatically grabbed from your bank account and invested into your entire M1 Finance account. That way, that money is gone. It's not there anymore. It's invested automatically, and you don't have to think about it. In reality, I might just have to look at my investments maybe once a week or maybe once a month, because basically everything is done for me automatically, and that's why I use M1 Finance. And by the way, I invest around $4,500 every single week. And again, the same amount of money, the same time. That way is dollar cost average. So basically, if you get paid on Fridays, invest that money every Friday, 25%. So again, quick example here. If you make $2,000 bi-weekly and you want to invest 25%, in reality, multiply, well, 20%. Multiply by 0.2%, which is 20%. In reality, you invest $400 every single time you get paid automatically. Now, here are some quick numbers I want to run here. Again, if you're investing $400 bi-weekly, that's around $800 every single month, right? And that's around every single year, multiplied by 12, that's around $9,600. So, what would happen if you kept doing this, for example, for the next 25 years, okay? If you started out with $0 and invested $9,600 every single time you got paid, or for example, just 20% of your income if you don't have any kids, well, guess what happens in 25 years? In 25 years, you would have somewhere around a 10% return, somewhere around $1 million. That's how cool this actually is. Now, let's say, for example, you did it for 40 years, okay? 40 years, well, in reality, that's around 4.6 million, okay? So the more money you invest, the better off you'll be in the long term. And that is what you want to do. I highly recommend, okay, you want to max out your Roth IRA first and then use the rest of the money to put it into a taxable account. Exactly what I told you in M1 Finance. That is what I recommend. But again, make sure you understand what you're investing into. Investing carry risk. And again, it's for the long term. So that way you kind of minimize the risk. But guys, overall, that is exactly how I invest my money and exactly what I invest my money into and exactly how I went ahead and made around 40K last year. Okay, that's the core idea here. I'll see you guys next time. By the way, comment down below and let me know exactly how much money do you want to have in your portfolio to become financially free. Comment down below, let me know. I'll see you guys next time. Thanks for watching. As always, like if you liked it. On top of that, also start to down and hit the bell so you're notified. And on top of that, if you want to text me or talk to me one-on-one, join my Patreon, link down below, or send me a DM on Instagram at TommyBryson. And on top of that, if you want to see a video on exactly how I budget my money, well, here's that video right here. And click my face right now. I'll see you guys tomorrow. Thanks for watching, and as always, peace.